In this tutorial we will discuss trading strategies, of which we have 4. If you consider the prerequisites for a moment, I'll just read these aloud. We only trade historically respected support and resistance that converge with technical studies drawn either manually or by the price action pro indicator. If there is no visible historically respected support or resistance level, then we don't take the trade. If you look at price action and study the details of it, and you look closer at the levels at which price reacts, you'll notice that price often reacts on historical price action. In other words, swing highs, swing lows, previous highs, previous lows. But if you draw technical studies such as Fibonacci's and some of the others, you'll notice that price sometimes respects these levels and other times it simply blasts through them. And this is because price action can provide reference points that are visible to all traders, and so historical price action, these highs, these lows, and the swing highs and the swing lows in these micro dealing ranges, they're not as subjective as technical levels, which is why we tend to believe or count more on these historically respected levels than we do technical levels. But when you combine the two, I think then you find that these levels become quite price sensitive, and which is ultimately what we're looking for. The historically respected levels can either be identified automatically using some of the indicator functionality, or we can find these levels manually. And when I say manually, it's ultimately a question of looking at price action indicator free in the MetaTrader platform, and using the tools available such as the horizontal line and the channels and stuff like this to find the levels. If we focus to begin with on the automatically drawn levels of support and resistance, we have to enable a function called the dynamic analysis functionality. And then when this has been done, we'll have a look at the daily chart, and then we'll work our way down to the 4-hour and the 1-hour chart. Let's have a quick look at what this might look like. So if we open up a chart here, we can see that we have this is the pound US dollar, and this is the daily chart. So if we enable some, let's go down to the 4-hour chart here, and we'll enable, I'll just disable the dashboard so we can get more price action here. So let's just do that quickly, and then we'll move the price action all the way to the end. There we are. And now let's have a look at some of these dynamic levels. You see here enabled trend lines. This we will set to true, as well as the enabled dynamic analysis. If we start off with these settings, we can see that we have this level here, this one here, and then these two just below. So if we consider for a moment this level here, we can see that price came down to this level and then broke through, and then came up to this level, went through, held above for a period of time before moving lower again. Price came up to this level, was rejected, and then moved through again. So this seems to be an interesting level. If we look at another setting in the indicator, which is called the greater period multiplier, and we set this to, for example, 2, like this, what this does is that the indicator will look at the currently active chart, which is a 4-hour, and it'll look at this value here, and it will, in this case, look for levels on the currently active chart plus 2. So in this case, it'll look at the weekly chart, calculate the levels, and draw them in the active chart. So if we press OK to this, we can see these levels here. These are actually weekly levels that we're drawing on the 4-hour chart. And the same applies. This is all dynamic. So if we click on the 1-hour chart here, then we can see we have daily levels on the 1-hour chart, and so on and so forth. Down to the half an hour, then we have 4-hour levels on the half an hour chart, and you can see these levels are quite nice. Here we have this beautiful dealing range, which are very, very interesting indeed, especially when price decides to choose a side here. This would have been a nice breakout opportunity here. This one we probably would have missed because of the momentum and the spike that went through. But here we can see these levels are generally quite interesting and most profound, especially when you use the higher time frame levels and you draw them on the currently active chart. The daily levels are generally quite nice. So if we have a Let's have a quick look. We'll zoom out here and refresh the chart. There we are. We can see here that we have these lovely levels. Look at this level that goes through here. We have a swing high and two swing lows. And we have some price action kind of moving in and around this level here. If we look here, we have a swing high, some price action moving around at this level here, swing low here. So these are beautiful levels indeed. If we move on to the manually drawn levels, again we start on the daily chart and work our way down. So let's have a quick look. Look here, as you can see here, I have drawn these levels here. On the daily chart I drew red lines, and so these lines in red I liked, which I selected. We could see we have a swing high here, which is lovely. We have this bar that comes down here and kind of touches this level, then we have this bar touches this level, and then we have a lot of price action at precisely this level here, and then we have like another pin bar that comes down, touches the level before it's rejected. So this is a beautiful level on the daily chart. We look at the next daily level, again another red level. We see price came down here, and just before price dropped, it stalled at this level here, and so this is nice here. So let's maybe move this up slightly. So price stopped there and then finally broke through, and then when price came up, it came up to precisely this level, and price broke above it here and it came down, touched this level before continuing higher. We have another touch here, another touch here, another touch here, and then we have again a swing high that was rejected at this level. So this is a beautiful level again on the daily chart. When I'm on a lower time frame such as the hourly and I see a red line, I know that this is a line that I have identified on the daily chart, and then I know thus that these are quite important and significant. So these are levels that I can generally that I can trust to hold to some degree, of course. We go to the 4-hour chart. On 4-hour charts I like to use blue lines, and so here we have the blue line here, which I drew, which of course is very clear level of support and resistance, where price came down, kind of had a stall, moved through the level, came up to this level, was rejected, when it moved through the level, came back to this level, was rejected, and then you can see it really kind of rotates around this level here, which is a very nice level indeed. And if we look here, we can see that we have some price action which stalls this level, finally moves through, and then price kind of moves up and around this level quite nicely before it finally moves higher. These lows here are very nice, and they help qualify this level, and then price later comes down to this level, is rejected and moves higher. And so these are beautiful levels, very nice levels indeed, and most certainly levels I'll have a keen eye on whilst watching price in the future. That was the a quick analysis of the automatically and manually identified historical support and resistance levels. But now let's have a quick look at the technical studies and what these levels might be. The levels that I like to focus on are, as an example, we have the previous year, previous month, and previous week and previous day levels. When I say levels, I mean we have the previous period high and low and the Fibonacci levels, as well as the opens and the closes. So if I enable these levels via the indicator, I can see these on the chart, and there will be the highs and the lows from last year, as well as the Fibonacci levels between the high and the low, as well as the extensions, and they'll simply be projected onto the current year's price action. And the same applies for the month, the week, and the day. Additionally, we have the internal and external Fibonacci retracements and extensions, of course, and these can either be standalone or individual, or they can be overlapping. We also have our pivots, of course. We have our monthly and our weekly and our daily pivots, and these can be either standalone, individual, or they can be overlapping with Fibonacci levels. And then, of course, we have our vanilla Fibonacci levels. Let's just have a quick look and see what these might look like. So we have our levels here that we've identified, and these look quite nice. And so now we have to go in and identify some technical studies. So now let's go in and enable some technical studies. We'll start on the previous period levels. We'll do this for the year and the month. We can see here some nice things happening. We can see here, let's see how far these two are apart. And these are about roughly 15 pips away from each other, so this is most certainly a level that I will look at. Additionally, here we have this level here overlapping with this level almost to the pip, and then we have some more here. Yeah, so these are of course some very interesting levels. And then we have this of course up here as well. This is perhaps slightly wider, maybe roughly 20 pips or so. If they start growing more than the 20% of the daily range, then they're not overlapping in my world. Okay, let's enable some other levels here. Let's do the pivots now. Where are we? If we scroll down slightly, we can see them. Here they are. We'll start with our monthly, weekly, and daily pivots. We have to go on the hourly chart here. We can't see the daily pivots on the 4-hour chart, so we'll do this. Oh, this is lovely. You can see here. Here we have a weekly pivot, a daily pivot, and a historically respected level, all overlapping here very nicely. So this is a beautiful level indeed. This was actually a very nice level here. This is, of course, is a micro level. I think it deserves some explanation. We can see here that we have this swing high here, which is rejected. Price moved through, resistance becomes support, and it overlaps perfectly with the daily central pivot. So when price moved through, this would be a beautiful selling opportunity. We can see here we have lower highs and lower lows. So this would be a beautiful short entry here. So these are nice levels. Let's remove these. Actually, we'll leave these on the chart, and we'll draw some manual Fibonacci's. Let's see. Let's draw perhaps from here to here. What do we have going on here? Not a whole lot. We have some technical levels overlapping, but I like to see these. Okay, if we consider this level here, here we have some swing highs here, move up into this level. Let's change these to a lower time frame, as these are not 4-hour levels. Do the same for this one so we don't confuse ourselves. There we are. Oops. So here we have this price action which was rejected, and it finally broke through, and it lines up very nicely with this 50% retracement from this swing low to this swing high, along with this daily S3. So this is again a very nice level. So this would potentially be a buy level, although price might want to move further into this and perhaps come down to these levels here, at the area where price was released and began its move up here. Okay, now we'll have a quick look at the strategies one by one. We have, as mentioned earlier, 4 strategies. We have the level tests, level breakout failures, we have level breakout pullbacks, and we have directional corrections. And we have 2 variations of the directional corrections. At the end of the day, all trade setups are level tests. It just depends on where they happen and how they happen. But let's start off with the level tests, and then we'll walk through the remaining 3 of our strategies here. Level tests look like this. We'll have our eye on a previously identified level, which will of course be historically respected support and resistance, which converges with some kind of a technical study, any of the technical studies that we spoke about earlier. So here we can see we have a significant level of historical support and resistance, and price moves up towards this level. And on the approach, you can either, for example, sell on the test of this level, or you could wait for a test and a failure, and then you would sell the retracement, like a Fibonacci retracement from this swing high to this swing low, and you would look for a 62 or 79% retracement before following this price down. And the same would apply here. Here we had 2 tests, but ultimately you don't know what's going to happen until it's happening. But I'll read these aloud. When price reaches and challenges a historically respected support or resistance level that converges with levels from greater period technical studies. when price moves up or down to test the upper lower edge of the market framework in a range bound market and is rejected. So here you have price stuck between an upper level of resistance and a lower level of support, and price will be moving between these two. Then you'll be looking to buy at support and sell at resistance. And here we have a graphical example of what this might look like. Price moved down to this level and was rejected. So you could buy on the retest here. You'd be looking to take some profit out just before these lows here, because we're most certainly going to fight to get price above this dealing range here. And again, we had another go here, so we could buy another one here. If we drew Fibonacci's from here to here, this would probably be the 79% retracement. So this would be a superb level to buy, of course, because we have confirmation this level is going to hold because of the previous two level holds here. So this would be beautiful. Then price made its way higher, came back to test this level once again before continuing to the top of our market framework. We have a look at another example. We have another upper bound and a lower bound here, where price managed to test these levels for a while before it finally broke lower, and it came back up to this level, and we had a very strong push up to this level. Price was rejected and held closed just below this level. As price retraced and came up to try once more before we had this giant rejection candle, and so this would be a very nice selling opportunity, and our stop could be placed just over the previous swing high. Then you could follow price down, again looking to take profit before we get into this area of consolidation. Then price comes up once again, is rejected, so on the open of this candle you could sell and follow price down. We have our market framework once more. Price moves into this level here, it comes lower. We have this beautiful rejection candle. We have two previous rejections prior confirming that this level might hold, and we have this rejection candle. And this looks like the hourly chart. So this is an hourly close and an hourly rejection candle, which is very nice indeed. And then price began to move higher. Again, you have to be careful and be taking profit before we get to these lows here, because this is a very thick price reference area that price is going to have a very tough time moving through. So most certainly look to take price at the lows here. Then price came back and tested it again multiple times, once, twice. On the third time, price was rejected very strongly and moved much higher here. If we look at the next strategy, which is called the level breakout failures, traditionally price will be moving very strongly up to a level, and it'll make a great attempt to move through and perhaps hold above this level or below this level for a period of time, and then finally price will move back below or above and then follow price either lower or higher. And generally when this happens, then there is a great deal of momentum on the move down or the move up. I mean, all the traders that bought when price held above this level, they have their stops perhaps on the other side of this level here, and so when price come down here, the fact that all of these traders stops are being hit will add to the downward momentum of this move, and so these moves are generally quite strong, and so these are actually quite advantageous setups to look for, most certainly higher probability than most of the others. We have a look at a couple of examples. I'll just read this out aloud once again. When price reaches and breaks through historically respected support and resistance that converges with levels from greater period technical studies but fails to hold. When price attempts to move out of a range-bound market, fails and moves back into the range. Again, all these breakout traders dying to catch the move, or rather the breakout of a level before it happens, are obliged to the market as soon as price holds, and when it comes back into the range, as mentioned earlier, their stops will be hit, and this will add to the order flow that supports our preferred direction of the market. We can see that price moved up to this level, was rejected multiple times, and then price closed above. We form this candle here, which is a nice weakness candle. When I say weakness, you can see that price attempted to go higher but was rejected, and then price closed on the lower half of this candle. So this is a bearish rejection candle, and then price finally plummeted south. And once again, price moved up, held above. We had actually a few hours of trading above this level before price finally broke lower here. And we had a nice retest of this level before the bottom fell out and price went lower. Another example, we can see here that price moved up here, began to close above these levels and then sit on this level for a long period of time, but then we can see this very strong rejection candle. We can see that the bulls really made an effort to go higher, but there was a strong rejection here. And then price bounced up. We have a bearish rejection candle here, and price finally shot lower here. And so this is kind of a breakout which failed, and price moved back into this range. We had another attempt. We had some rejection. It bounced between these levels here for a period of time before it finally began to move high. We can see we have higher lows here, and price finally moved above, closed above, and then price fell through. Then I'm not sure what happened here, but it looks like the price probably moved back up into this price imbalance before either going further low or continuing higher. Here we have another example where price was moving towards the upper level of this market framework, and it had an attempt to break through, fail, another attempt, fail, another attempt, fail, but we can see we're making some higher lows. This would look as if price is building up momentum and strength to move through this level. But we're seeing very strong rejection when price does finally reach this level. Then price finally moves higher, but is rejected. Then we have a lot of we have some spinning tops, which again shows weakness. And then price finally begins to break down and move lower. So all the breakout traders that bought positions as soon as price moved above perhaps this high or above this level, they're all financially obliged to this market, and they perhaps have their stops maybe below these swing lows here. So when price came below here, all these stops were triggered, and this added to a lot of downward order flow. So this is very good for us, of course, who waited patiently to see if price would hold or not. But as you can see, price kind of sat above this level here nicely. You can see all these wicks that come up to the level here, and then finally price broke through. So this would be a nice selling opportunity when these wicks came through to retest this level before it continued lower. This is a nice example. Then we have our level breakout pullbacks, and these we see in trending markets, but also in high volatility markets as well, where price approaches a level, is rejected, it manages to break through the level, and the simple fact that price rejected this level broke through it makes this level once again price sensitive. Why? Because we have a previous swing high, a previous resistance now becomes support. So when price comes back to this level, what do? We look back historically to these highs, and so we put our orders in to buy when price come back to this level, providing of course that this is indeed a historically respected level and we have some kind of a technical level that tells us that this is a good level. If we look to bearish moves, price is moving down to this level, it is rejected, it moves through, price comes back up. Where does it go to? Look left, it comes back to the support, which is now resistance. So we would be selling when price came back to retest this level and then follow the move lower. When price reaches and breaks through historically respected support or resistance that converges with levels from greater period technical studies and comes back to retest it before continuing. So these are also considered momentum entries where price is showing a directional bias and there's momentum in the direction of the bias, and before price can continue higher it has to come back, fill orders before it can continue. When price shows strength or weakness, breaks out of a range and then comes back to test the high or the low of a range before continuing. Again, let's have a look at some examples. We can see here the price was fighting to get above this level and it didn't manage. Price moves back down here, price blasts through, and again this candle held above, and then this candle came back to this level, precisely this level before continuing higher. We see price came up but kind of stalled for a period of time and then it dropped. And where did it come back to? Look left. We have this resistance, now support. So maybe price, I don't know what happened after this, maybe price went further higher, maybe price came lower here and moved back into the deeper Fibonacci retracements, which is, we have all this level here, which is also quite nice, before continuing higher or even going lower altogether. And here we have another example where price moves lower, stalls at this level, confirming that this level is sensitive, manages to break through, comes back up to this level. Where do we sell? Look left. This is our daily level, and it converges with a 38% retracement, which is beautiful. And so these are levels that we can most certainly trade with confidence, especially when they're like this. When you have levels that are lined up so tightly like this, along with the fact we have a daily historically respected level, and we have a greater swing from here to here, 38% retracement, which overlaps precisely at this level. This is a very nice trading example. We have this example here, which is perhaps slightly more volatile, and price bounces off a monthly central pivot, moves up to this level, is rejected, telling us that this is a price sensitive level. And of course, when you see this, then you have to make a mental note of it, perhaps draw a line from here and project it out into the future. This is the level that was respected historically. Price goes down, it comes up to this level. Again, we're working with a daily historically respected level from the daily chart, which converges with this Fibonacci level and this weekly central pivot. So we have two technical levels overlapping with the daily historical level. Three very good reasons to sell this currency pair. And then price started to move down. Where would you be looking to take profit here, and where would you put in your stop? You could put your stop just above the technical levels here, or you could put it into the deeper Fibonacci retracement, would put it just over the 50%. And your targets would be the first technical level or the first micro dealing range or micro historically respected level. So we'd be looking at these lows here, because you can see this, we have a swing low here, another swing low. So this is a nice area. So we'd be looking to take profit here, which is good we did, because price came down and was rejected and then moved back up to here. So this might have tormented us and teased us, and we might have experienced quite a lot of emotional pain here just watching price come back here, sitting there thinking, oh, I should have taken profit, I should have taken profit. So it's always good to take profit when the market makes it available. But if you're patient, then price managed to go lower. We'll be looking to take our next profit. Look left. This swing low would most certainly be a level we'd be looking at, and again we have a very significant technical level here. So I'd probably most certainly be out of my trade when price got to this level here. We have our directional corrections, the first of which is what is called an SDC, a standard directional correction. In a trending market, when price reaches and breaks through historically respected support or resistance and comes back to test the level prior to continuing higher or lower. When price is trending and forms a pullback to previous support or resistance before continuing in the direction of the trend. So if we have a quick look at what this might look like, we can see we have this trending market. These trends like this normally occur on the lower time frame, so this could very well be a 15-minute chart or a 5-minute chart. So price is moving down nicely like this, and we get price coming down here, stalls, we have a dealing range, we get a new dealing range. Where does price come before continuing lower? Well, it breaks through this level here, then it comes back to, look left, these swing lows, these lows here, has a sideways dealing range for a period of time. It finally moves lower, we get a new dealing range. What does it come back to? Look left, sell. Comes back, what does it come back to? Look left, sell. Another example, price is trending higher, it comes up to this level, and we see a lot of rejection at precisely this level. And so even if you don't, if you're looking at the lower time frames and you don't see a higher level of historically respected support and resistance, you can do this on the lower time frames as well. Just simply get your diagonal drawing tool or your horizontal drawing tool and draw a line that's just above or below the level that looks important, and you can see price just bounce off this level for quite a period of time, and it was rejected. And then this bar went straight up to the level and it was rejected. This tells us that this is a very important level. Then price comes down, then it blasts through. And what do these candles do? They sit on the fence. They sit on the fence that these candles built. which is quite funny. It's beautiful, and it's if you look at the bars, I mean the opens and the closes here are almost to the pip. It's beautiful. It's very almost very geometrical. And then price manages to push higher. We have some orders that need filling at roughly this reference point. If we look left, orders to buy this currency pair are filled, which pushes price higher. Another trending example where price comes down to this level, bounces. What does this tell us? It tells us that this is a sensitive level. It breaks through. This candle comes where to? Look left. Rejection, it moves lower. It comes back up. Where to? Look left. And the process continues on and on and on. Then we have EDC, extended directional corrections, where price moves, as an example, down to this level here, and then price perhaps stalls at this level for a period of time, or maybe it doesn't stall, and then all of a sudden there's a very strong move through the level. And so this strong move through the level will create a price imbalance, which is this. And price imbalances normally get filled before price will continue. And if the price imbalance is large, then price will typically have one or more swings down in order to rebalance price. As we can see here, we have two swings. Price came back, moved higher again, and by the time price reached this historical level here, price had been rebalanced, and then price normally moves very strongly in the direction of the trend. We have the same in a in a bullish market, where price moves up to this level, is rejected, it blasts through, creating a price imbalance, and then we have a multi-swing rebalancing of price back to this level before price continues in the direction of the trend. In a trending market, when price reaches and breaks through historically respected support or resistance and comes back to test a level prior to continuing higher or lower. When price is trending and forms an extended multi-swing pullback to support resistance before continuing in the direction of the trend. We have a look here what it looks like, and we can see we have a dealing range here, and this can be, for example, a period of time just before some news hits the market. Then the information comes out, price is blasted either north or south, and this creates a price imbalance marked with a red arrow. Then we have a multi-swing retracement back to the lows of this dealing range before price continues up. And so here we have this is a lovely reference point here telling us that this level is significant. But we also have this high of the dealing range, which is also significant. When price finally moved higher, we had this bar that came down precisely to the same level as the top of the dealing range. If we look at this example, we can see that price moved higher. It stalled at this level. This bar opened but was rejected precisely at this level, and then price came up, touched this level, rejection, and finally blasted up. And then we have this price imbalance here, and so price naturally wants to rebalance, not with one swing but two swings back to these highs here before continuing higher. Have a look at another example. We can see that price came up to this level here, and it kind of hovers, it sticks to this level, just below this level. Price finally breaks higher. We have a price imbalance. Then we have our first swing and our second swing precisely to this level before price continues higher. A few final points I'd like to reiterate before we conclude. The first being, keep your eye on greater period historically respected support and resistance. And here I mean primarily the daily and the 4-hour charts, as these levels are very significant and certainly in the minds of traders. And if you wish to gain insight into what price is doing at a given level, focus on the detail of the price move that's on the smaller time frames as they're telling a story. So don't be afraid to go into the 1 minute and the 5 minute chart and study the price action when it reaches these levels. And finally, look for price imbalances. When you see big spikes up as a result of news or something else, you can generally expect price to come back and rebalance before it continues either in the direction of the spike or in the opposite direction. So these are most certainly the things that you should keep an eye on. But that's it for now. Thanks for watching.